GM, good morning. Welcome to the Milk Road Show, the daily crypto show that's as exciting as winning the Stanley Cup. If you're a Florida Panthers fan, I'm your host, Jay Hamilton, and today we're giving you the silver spoon you need to make life-changing money in the next 12 months. But most of you will fuck this up. I'm sorry, but I have to say it. So listen closely, because this is your last chance to get your portfolio right for the rest of this bull run. Here to share his 4 tips for the next 12 months is the guy who first bought ETH at 150, head of research at Milk Road Pro, Kai Reidhead. Kai, welcome back to the show.
What's going on, guys?
Okay, Kai, first up, before we talk about your 4 tips for how to capitalize on the rest of this bull cycle, let's just take a step back. Where are we in this cycle, and what makes you have so much conviction that the opportunity is still in the next 12 months?
Yeah, so actually, it's one of the tips that I'm going to be talking about, which is when things get a little hairy in markets, which, the last few months have been, I think, scary for a bunch of people. People are panicking. Just zoom out and look at where are we in the cycle. And now looking at historical cycles is never a perfect way to determine, what's going to happen next. But assets in general, especially crypto, has been pretty dang cyclical. And while you might not be able to time things perfectly to the day or even to the month, you can get a pretty general direction of where things are. You just put up a picture here on screen of the last 3 cycles of crypto, and on that is the blue line that shows the halvings. And at the halving point, we generally have this sort of like accumulation phase where a bunch of the miners are selling because their revenues have gone down. People don't really know what's going to happen in markets. It takes a few months to kind of consolidate and figure that out, and then we sort of take off. It's happened every other time with the halving, which is quite interesting. And then following that is the moment where things get crazy. And we have the parabolic run that we've gotten used to from 2021 and from 2017. I believe we're in that phase where once we get through this consolidation phase, and it could be in a few weeks, it could be a few months. My best guess is maybe the end of the summer. I don't know. It actually could be earlier with ETH ETF approval. And then I think we go into a parabolic move, which looks probably quite similar to Q4 of 2023, Q1 of 2024, but probably even more aggressive, meaning more pullbacks, but maybe even higher numbers. That's kind of my best guess when I look back on historicals. And also when you just think about where we're at in the rate cut cycle and in the liquidity cycle, I just don't think this bull run is anywhere near over. I think it's kind of just getting started more than anything.
That's great news. Super excited to hear that we're just getting started. So if you haven't done well so far in this bull market, don't panic. The big opportunity is still coming. Now, Kai, yesterday in our episode, we gave a lesson on pullbacks because a lot of people are freaking out right now about this current pullback. And basically through our research, what we noticed was that in the past 2 cycles, there was one cycle had 9 pullbacks, the other had 12 pullbacks, and each one averaged between 20 to 60% pullback. So this current pullback that we're in is actually expected and part of a bull run, right? But most people don't seem to feel that way. You and I have this, calm, buy low energy to us right now. I'm not getting that from our readers and from the rest of crypto investors. Why is that?
Well, there's a few reasons for this. I'd say first, humans suck at investing. and more the reason why is humans suck at psychology and controlling emotions. And so, I think every person listening to this episode knows that you should buy low and sell high. We all know that. That's like the famous quote from, I don't even know who quoted it, to be honest, but we all know that quote. But in those moments, it's so damn hard to do. Like when things are low, especially like bear market vibes, it's tough to buy. And when things are super high, all you want to do is buy. And this is just all around psychology more than anything. Actually, I have a nice image we could put up on the screen, Jay, of investing psychology, which is if you think of these cycles, when things go up really high and we're in green, it's been green for days and days and days. This is the point of maximum financial risk to actually buy. Yet it's always the point when we're the most euphoric and we really want to buy. And then on the other end is when things are down, things are red. Like they have been just now for the last few months, it's just been down and down and down since March. That is the point of least financial risk. And yet that is the stage of where we panic, we end up capitulating and we sell, even though we know you want to buy low and sell high. It just it's hard to control your emotions. And so what happens is people just get scared. And if you look at the fear and greed index, I think we've just hit the lowest point we've been on the fear and greed index for the last 18 months. And yet, I mean, for me, this is a point where I'm saying, hey, buy, 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 buy. Back in March and in February, I kept saying, we're going to get a pullback. I don't know when, but it feels to me we got to get one. And I was like, I don't know if I'd be buying right now. I was at least saying, don't leverage. And look, it's all sentiment. And the thing you understand about investing is it's just a game. And the thing is, if everyone understood this and was good at this game wouldn't be that fun because you wouldn't make a lot of money, right? But a bunch of people selling when we're low, it's actually a really good thing because it means we get lower prices to buy in and then sell on them next time when they buy in, when we wait till we get to all-time highs or past. It sucks, but that's the game of investing. And so if you can just control your emotions, you will be 80%, 90% of the market. It's all you got to do is figure out emotions. And so again, why I say zoom out first is because we just got to look and make sure, well, is this the end of the cycle? In all the metrics, it doesn't make sense. It should be. It'd be way too fast if it was in terms of timing. The macro cycle, in terms of liquidity and rates, doesn't seem to be, it's just getting started. So like, if you just think about the numbers, it doesn't make sense that this would be the end of the cycle. So it appears it's probably just a pullback, which then you can just say, okay, it's just a pullback. These are normal. We had 12 of them last cycle, 9 the one before that, or vice versa. And so like, this is probably just a normal pullback. Let's buy. If anything, like I hope it bleeds out more so I can buy more.
Okay, so lots of fear and panic in the marketplace, but you see it as a buy low opportunity. I think the best summary of this came from our friend Ovi, known as OSF on Twitter, who put out a great tweet recently that really captures the feeling that a lot of people are having in this market and what he refers to as the pain trade. I want to highlight this tweet. I'm going to read it out, and then I would love to get your comments, Kai, and then we'll lead into your 4 tips, which are hopefully going to lead you guys listening to this to not fuck this up and to actually capitalize on this market. So let me just read this out for you. OSF says, a description of this year's pain trade. You were too bearish all of 2023 and didn't buy enough risk. After the BTC ETF got approved, you were kicking yourself, and instead of buying BTC or ETH, you went into alts, expecting a higher beta catch-up trade. You avoided memes because you thought they were stupid. You had a bit of fun at points. You had a bit of fun at points of the year, but of course, you're not in alts for just a 50% gain, and you were looking for that 5 to 10x. Unfortunately, alts never really kicked on as you sat on the sidelines watching meme coins go up 10 to 100x across multiple different coins. You remember how you sat on the sideline during NFTs for too long in 2021. So finally, you decided to gamble in meme coins like around April or May this year. Unbelievably, meme coins have been down only ever since. And to add to that pain, you also sold any remaining ETH you had long before the ETF got approved. You're sitting here wondering, how the fuck have I lost money in a raging market?
Oh man, that's such a good tweet. And I feel for anyone who did that. And the fact is, many people did. I know so many people that wanted to sell their ETH and then all of a sudden we had that surprise ETF approval. I know so many people that all of a sudden decided to buy meme coins. I mean, hey, I bought DGen, I think in maybe March or something. And I mean, that's been a terrible idea too. So like, I've made some of those mistakes too. I think many of us have. It's interesting. There's 2 things that we're going to talk about, which is one, trying to chase narratives, right? If you meme coins had their narrative for the first bit of this year, and I guess a little bit of last year too. And all of a sudden, once that narrative gets so hot, that's when everyone decides to buy. Again, the time of the most financial risk is when we all start to FOMO into meme coins. We tend to lag on these narratives for whatever reason. So that's one big thing. The other thing that we're going to talk about is just like portfolio allocation. And if you keep jumping around from altcoin to altcoin and you just hold what I would call a bag of shit, then this cycle is going to be very tough for you. And these pullbacks are going to be very difficult for you because here's the thing. If you just held Bitcoin or ETH, you're only down, like I think Bitcoin's down maybe 24%. That's it. That's not a big move. ETH is right around the same. I actually think ETH might be a little bit better right now. I'm not sure. But like they're not that bad at all. And so that is a very typical pullback and not too hard to stomach. And then they still do well when things get green. If you're holding alts, on the other hand, especially a lot of meme coins, you're down 50, 60, 70, maybe even 80% in some cases. I mean, some 90%. And so, yeah, that shit's hard to stomach. And one of the problems I see is so many people come in and they forget about just buying those Bitcoin and ETH because they're like, well, I want, as OSF said, I want that 5 to 10x. So I don't, or I want 100x. So they don't even buy those. And that's when this stuff becomes so painful. These pullbacks are so hard to manage and your emotions just get way out of whack. So you really got to figure out how to allocate properly. And then these dips really are just, they're not so bad. But I feel bad for anyone who's followed this OSF pain trade. It's a funny story, but I think it's real for many people.
Okay, so lots of people feeling pain because they, as OSF said, they fucked up the first half of the cycle. They chase narratives. Maybe their portfolio allocation isn't the right portfolio allocation. I mean, let's be honest, it's tough. Not all of us are spending every minute of every day like you are researching on chain, researching macro, looking at TA. So it's easy to mess it up. But the opportunity, thankfully, is still here.
Still exists. Yeah.
It still exists, right? Okay, everybody listening, guys, don't worry. Now's the time. Don't panic. Now's the time to be confident. And that's why we got Kyle to coach and guide us, because he coaches and guides thousands of investors through Milk Road Pro. So no better person to do it than you, Kai. Please, 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 please help us. You've prepared 4 tips for us today to ensure that we don't fuck this up the next 12 months. What are your 4 tips?
So I know it's tough because a lot of people probably listening right now weren't in the market back in like early 2023, late 2022 at the very low. Thankfully, we were still doing the show then. We had things rolling. And so we were buying when it was at its very low. And so for us, like these pullbacks are nothing because we're up, right? But I know a lot of people they left at that point. Or I know a lot of people just actually literally the first time coming into crypto was like over the last few months. So it's a bit different for you guys. And so the first thing I would say is, study, right? Learn, understand these markets. And when pullbacks like this happen, zoom out. Zoom out, look at the chart that we showed at the beginning of the show. Look at, we show a bunch of charts in Pro that kind of look at where are we in the cycle. You got to know that these pullbacks are going to happen. There's going to be 9, 10. There's probably going to be at least 10 of them this cycle. We've already had 5. So you expect them. Don't get worried when they happen. Expect them. The key is zoom out and go, is this probably the last pullback? Meaning, are we near the top? Or are we likely to recover from this and have more pullbacks? I already kind of talked at the beginning of the show of like how you can sort of tell. Look at macro. Are we sort of at the tail end of the macro cycle, with meaning rates and liquidity? Look at previous cycles, timing, look at structure of it. It's not hard to just look at a chart and go, oh, okay, yeah, it looks like pretty similar to before. It looks like we got about halfway to go. Like you can figure this out by looking at charts. You can look at sentiment, things like that. There's a lot of different things you can look at. Either way, the first thing is just do that and set yourself up to say, hey, I don't think that this cycle's over. And again, you could be wrong, but at least take a look and try to understand it. That's the first thing I would say. Because if you're just sort of basing this off of price action, you're never going to get this right? So look at the data that you have. We also have a ton of data on Pro. If you need help with this, we can help you. I highly recommend you go Pro. Actually, starting today, starting on Sunday of this week, we are raising the price of Pro. The reason for this is we've just launched 3 new features into Pro. We've launched our community, so you can actually ask us questions like, hey, Kyle, do you think that we're at the top of the cycle in our Discord? And so we've launched that. We've launched our portfolio where you can literally see the exact portfolio we have right now and how we're moving it throughout the cycle. So that's really, really huge and will help you sort of guide through this. And then we actually have where are we in the cycle indicators every Tuesday, which literally just show you charts of where we think we're at in the cycle. So like all the questions you're having right now as this pullback is occurring and we're talking about this, they're all answered in Pro. The 2,000 people we have signed up Pro, they don't have an issue. But the price of Pro is going up on Sunday because we keep launching more value. And so if you sign up today, you'll get it for the lower price. And you'll have that price for forever. So once the price goes up on Sunday, that's it. It's done. You'll never get this price again. So highly recommend you guys, if you want to succeed in the cycle, just go check that out and get it before it goes up, right? That's a steal for you. Okay, so that's number 1. Figure out where we're at in the cycle. Number 2, what I call the 80-20 rule. You want to stick to this rule. The 80-20 rule is pretty simple. 80% of your portfolio should be in the majors. And the majors are Bitcoin, ETH, and Sol. Okay, nothing else qualifies as a major. I don't care how good you think a certain coin is. It does not matter. It is not a major. And even Sol is kind of like a questionable major. But just this year, we've said, you know what, we're going to put Sol in the majors. We believe it's there. But Bitcoin and ETH. And then 20% can go in whatever the hell shit you want to put it in. You want to put it in like good solid altcoins? Great. That's very smart of you. With fundamentals like Maker, fantastic. If you want to put it in mommy and daddy token, whatever. I don't care. Do whatever you want. That 20%, you should assume you're going to lose it all. And if you want to fuck around and trade it and chase narratives and do whatever, go for it. Have all the fun you want in that. 80% though stays in the majors and you don't touch it the whole cycle. Okay. You sell it when you get to the top of the cycle and that's it. That's where your winnings are going to come from. Okay. probably you're going to lose in that 20%, but at least you're getting your inner degen and that curiosity and the shitty investor of you. You're getting to use that 20% over there. Maybe you win some. If you do, that's fantastic. But secure your profits this cycle by just holding the majors. The thing is, Bitcoin, we probably think maybe 2 to 3x's from here in the next 12 to 18 months. That's massive. You don't get those returns in any other market, even though that's the most boring asset in this space. ETH is probably a 4 to 5x, Solana even more. Be okay with that. You don't need a 10 or 100x. And halfway through the cycle, you're probably not going to get that anyway. So like change your expectations and your perspective here. Buy the majors and be happy with a 2 to 5x. That is a steal. And if you can do that every year, like you're set up for life. Doesn't even matter how much you're putting in. So 80-20 rule, don't move away from that. That is the key thing. Also, when you have pullbacks, if 80% of your assets are in Bitcoin and ETH, you're good. You don't care. You're not worried. It's all good. 20% of your portfolio is going to just get wrecked. But whatever, you're all good. It doesn't actually, like, your net worth doesn't change much when most of your net worth is in the majors. So that's a big one there. The next one, don't short-term trade. And especially, I'm not saying don't trade at all. Like if you want to buy a new token throughout the cycle because, I don't know, it just launched or it's all of a sudden got some fundamentals around it, that's great. In Pro, we give signals all the time. We always put, whenever we're looking to buy a new token, we announce it all the time. And so, but we're not trading. We're not like moving in and out of positions all the time. We're looking to spot undervalued assets, like I mentioned Maker 2 weeks ago. So yeah, we're buying that in the middle of the cycle. But don't trade. Don't buy in and then be like, oh, it went up a little bit, so now I'm going to sell and buy back in when it goes down. Like you're not going to achieve, you're not going to succeed in that. Unless you're a pro trader, sure, go for it. But like most of us listening here, we are not that. The other thing is when you're trading or if you're buying or selling, don't do it based off FOMO. If a token just went up 200% because it's been, it's had the narrative for the last month, don't buy that token at that point. That's a terrible time to buy it. When do you want to buy the token? Now, when we've just had a pullback for the last 3 months, right? And everything is just so undervalued or on, let's call it a discount, like Milk Road Pro is right now, then you want to buy it, right? You don't want to buy it when the price is pumping and pumping for months. But again, if you go back to that chart I shared about investing emotions, most of you will buy it after it's pumped. Don't do that, okay? Never buy when it's green for months. Wait for it to be red. And then the last thing is understand risk reward. This one is a tough one, I think, for many people, but it can be very helpful. When I put out that Maker is undervalued, probably the most undervalued asset in crypto, and I was like, it might 20x. The amount of people that I had ask me, should I move all of my ETH or all of my SOL or my entire portfolio into Maker? And I just answered, I didn't even know what to answer. I was like, what? Like, absolutely not. You should never do that. To be clear, I don't think diversification is the best thing if you want to make money. You want to consolidate and have actually a little amount of assets. But that doesn't mean just one asset. And it definitely doesn't mean, it can be just one asset if it's like the one low risk asset in the industry, like let's say Bitcoin or ETH. If you want to just hold that, I think that's a great idea. But buying a low cap, risky ass token that we say is undervalued, but we don't actually know, that might 20x, you don't want to go all in on that token for sure. You want to allocate based off risk and reward. So the majors, why do I put 80% towards the majors like ETH and Bitcoin? It's because like no matter what happens, it's pretty clear that those assets are going to go up, right? To me, it doesn't really matter what apps take off, what use cases take off. If stablecoins win out, if DPIN is a big thing, if DeFi ends up doing well, regardless, ETH is going to do quite well, and so is Solana. That's it, But for Maker to succeed, there's like one thing has to happen. One, stablecoins need to do really well. And then two, decentralized stablecoins have to also do really well. And then Maker has to be the one that happens to win out of all that. You don't know that it's going to happen. So like, yes, I think it can 20x. It could also do nothing, right? Whereas ETH, like it's probably not going to do nothing because as long as crypto does well, it's going to go up. Same with Bitcoin. So you got to really think about, and I mean, you think about Ethereum, it's been around since 2015, Bitcoin since 10 or 2009. So like these assets have staying power. They have network effects. They're going to be here. They're not going away. But these smaller apps, they can be great opportunities, but you don't know if they're actually going to make it. And even crypto might make it, but they might not. And I think the worst thing you could possibly do is be investing in crypto. And when crypto goes from 2 trillion to 10 trillion over the next 18 months and you make no money, that would be insane. If you were in the right industry, that was like the best industry in the world in terms of performance, and you actually didn't make any money in it, even though you were investing in it, That would be the worst case scenario. And that's what happens if you just buy a bunch of shit coins. You don't just go 80-20 and then understand your risk reward. So for example, in our portfolio in Milk Road Pro, we hold Maker, but I think it's about 3.7% of our entire portfolio. That's understanding risk reward and allocating properly, right? So you really, really, really want to figure that out. We just did a pro report all about risk reward, so I highly recommend you check that one out. Went out last Saturday, and there's some nice charts in there to help you kind of understand this. But really try to figure that out and allocate your assets properly. Easiest thing I can say, 80-20. How you allocate in that 20%. I mean, that's, again, read that pro report. It's a whole discussion. Maybe we'll have a whole podcast on it one day. But yeah, that's it. Let's recap real quick, Jay. First, zoom out, look at where we're at in the cycle. Is this the last pullback or potentially the last pullback, or there's still plenty of room to go? 80-20 rule. Don't short-term trade and definitely do not FOMO. And then understand your risk reward as you allocate. If you do those 4 things, I can't guarantee that you won't succeed or that you will succeed. Sorry, but like there's a pretty good chance.
I mean, as we always say, it's not hard to make money in crypto during a bull cycle, but, and it's unfortunate there's a but, most will fuck it up. And we know that because we've spoken and seen that over and over again in past cycles, and even seen it so far in this cycle. So
it's all emotions. It is all your emotions. And the best thing you can do is try to have tools that can help you manage those emotions. Investing in the right assets is one of them. Allocating properly, right? Zooming out. Like all these things help you to manage your emotions. So if you don't put those things in place, you will fuck this up because you're a human. And that's what humans do. We fuck things up.
Well, on that note, thanks so much for joining us today, Kai. No, seriously, thanks for joining us. Thanks for guiding us towards success in this bull market. Everybody listening in, if you want direct access to Kyle, make sure you go pro before the price goes up on Sunday. Link is in the show notes. Kai, thanks so much for joining again. We'll see you again later this week or next week. I'm not sure when, but can't wait till then.
Cool. Take care, guys.
In case you missed it, here's what else happened in news. Solana has introduced Solana Actions and Blinks, which is short for blockchain links, enabling websites to integrate Solana transactions through shareable URLs. This is huge news as users can now encounter and engage with Solana transactions on social media platforms, online marketplaces, and even through physical QR codes, all without leaving the host website. Also in news, Julian Assange, the Australian journalist and activist who co-founded WikiLeaks, the platform renowned for publishing classified documents, was released on June 24th. He has been imprisoned since April 2019. At the time of his incarceration, family members and friends of Assange created Assange DAO to fund his legal battle. Assange DAO member Silke Noah recently revealed that approximately 37 million worth of ETH has been spent on Assange's legal defense and related campaigns. Thanks so much for joining us today, folks. Have a wicked awesome day. Thank you for listening to Milk Road Radio, the easiest path to get smarter about crypto. If you like this episode, share it and hit subscribe or follow so you don't miss out on the next one. There's also a link in the description to our free 5-minute daily newsletter where we simplify crypto for you while making you laugh. And if you're willing to step up your crypto investing game, then we'll leave a link to Milk Road Pro as well, your #1 resource to help you invest successfully in crypto. One final note, this podcast is for educational purposes only, and nothing we say is financial advice. Crypto is risky, so you should never invest more than you're willing to lose. Thank you, friends, and we'll see you in the next one.